this is our frontier opening bell for Wednesday, the 27th of October. Welcome, my guest, to the show today, Joshua Odebisi, Head of Banking Research and Analysis at Vetiva Capital Management. Joshua, it's good to have you today.
Good morning. Thank you for having me.
Thank you. You're going to take us through a number of some of the earnings within the Nigeria space in the banking industry, with some of the big names such as JITCO reporting for the period under review. Last week we got Stanbic IBTC. UBA also earnings came in earlier in the week. You chew that for us in a short while. But quick run through the Nigerian market finished flat yesterday despite about 0.2% uptick in the banking sector. Index, we still saw strong buying in the shares of FBN Holdings, with the struggle for the majority ownership of the financial services company still out there between some of the biggest billionaires in Nigeria. The BRVM was about 0.75% better. EGX eked out 70 basis points. That's good business. Then you had the Nairobi Bus down by nearly 0.5%, and the GSE up on Tuesday by nearly 1%. Let's cross to East Africa very quickly, grab some headlines for you with the AFDB and Africa's Investment Forum, which is one of the main umbrella of investors profiling for the AFDB, looking to set up 5 billion shillings in a vaccine plant in East Africa. The race is for Africa to have facilities to produce its own virus vaccine. Moderna, one of the world's leading the COVID-19 vaccine producer, it says it's planning to set up a plant in Africa, but yet to decide whether that will be in Rwanda, Senegal, or South Africa. The Kenya Central Bank has issued guidance on climate-related risk management, all in the final days before the COP26 summit taking place in Scotland. Then that starts on Friday, by the way. It's going to be from November the 1st till the 12th of the new month. The Alliance has says it's bought 66% stake in Jubilee Insurance of Uganda. Alliance is one of the largest insurance and other financial services provider based in Europe. Then you've got Tanzania pumping $530 million into 2 mining projects this year. And Ethiopia's first mortgage bank, Go Better, has gone live. Well, let's see how it goes within the Ethiopian space in the banking and housing funding financing space. Let's touch West Africa, and that's where we're looking at Morocco, looking to set up for Nigeria gas pipeline project. What is this all about? We're going to find details, part of the deal signed between Morocco and Nigeria yesterday by Nigeria's Minister for Science, Technology and Innovation. Then you've got Access Bank, says it's looking to merge the African Banking Corporation of Zambia, which is Atlas Mara's bank, with the existing Access Bank of Zambia. That should be taking place next year. JITCO earnings is what Joshua will be chewing over. Boa Cement, Nigeria's second largest cement maker, came in with 19.4% revenue, profit after tax 23%, earnings per share jumped by almost the same, merging net finance cost down 63.5%. Wema Bank yesterday notified customers that it will no longer accept 50 British pounds notes and 20 British pounds notes with effect from January the 1st, because the Bank of England is withdrawing those 2 currency notes from circulation next year. So if you've got any of those note, 20 pounds notes, you better deposit them before December the 31st. That's according to Wema Bank. And the Central African Market Securities Exchange, the BV Mark, is planning to create a stock trading academy in Douala. That's where the headquarters is in Cameroon. Joshua, hit the ground for me with the banking sector. Has a whole lot to talk about. Let's start with Access Bank deal.
Well, okay. So for the Access Bank merger, obviously this is just part of the expansion strategy. So in the Zambian market, they already had a presence, but this in effect is going to take their assets over $1 billion, and so I think that this is just quite a positive one for them. And again, it follows their strategy with regards to expansion in across the African continent, and in whatever market they are in, they obviously want to be one of the largest banks. And so I think it's a very aggressive strategy. But what I like is that they made it very clear that this merger is not going to require too much capital outlay from Access Bank. So, they're just expanding their assets, expanding their footprint. They're going to have several more branches in the country. And then, like I said, much more assets. So they're, acquiring as a way to grow in that market. So I think what they're doing is adopting, specific strategies for different countries. So obviously they first gain an entry point, then look to, perform mergers that will help to grow their assets. I think we're going to continue to see that over the next, by next year, we'll probably hear a lot more about that across, this Eastern and Southern African markets. And so we definitely expect Access Bank to continue to grow exponentially and aggressively for the next few.
Yeah, walk me through the GT Bank earnings and UBA very quickly.
Right. For GT so, obviously we know that their earnings have been trailing last year's performance. So gross earnings were down 12% year on year. For Q3 though, their gross earnings did grow by about 9%. So that shows that there's been a bit of a recovery. We've seen that their assets have grown slightly. So that means that they got pretty much flat yield on assets, but they were able to obviously improve quarter on quarter. But interest income is still down by about 15% year on year. Their net interest income was down by 14%, so they did about 163 billion. However, the positive aspect is that non-interest revenue has remained strong, so it's grown by about 19% year on year. So they're doing almost 119 billion. So I think that that's really where the focus is going to be, because GTCO, we know that the strategy from the restructuring to the holdco structure is all about expanding their income from commissions and fees through their digital channels and digital banking and USSD and things like that, as well as other income lines that they will continue to aggressively push and expand over the next few. And I think that this is still a positive sign. However, we will start to see the benefits of the whole core structure probably from Q1 next year rather than right now. On another positive note, the impairments were down by about 41% to just under 6 billion. So again, we're seeing that there's been a bit of a recovery from last year as well as even from Q2, because they sort of grew quite aggressively in Q2. So impairments went up quite sharply, but they've come down again by about 55% quarter on quarter. So that is also positive. And again, we know that GT have some of the most efficient operations in banking. The cost to income ratio is currently at about just under 44%, which is industry leading, still is. And so because of that, their net income from operations, their profit before tax came in at about 152 billion. And their profit after tax at about 129 billion, which is 9% lower year on year. But like I said, the improvements from Q2 to Q3 are very positive and they bode well for H2. The second half of the year is probably going to be a lot stronger than the first half. And that, again, is down to the kinds of issues that we saw, especially in Q2. And so because of that, I think even going into next year, obviously the Q1 and Q2 figures will give quite a low base. And so we'll probably see quite aggressive expansion next year, in the first half of the year at least. So I think that's still a positive sign. As for
just give me one single small for UBA.
Yeah, so UBA, they have been doing quite well regardless. I mean, obviously we've seen the fact that I think they are pretty much tying with Access Bank with regards to growth in gross earnings. And I think obviously that is down to the fact that they are diversified outside of the Nigerian market quite heavily. They get about 50%, I think it's still the highest, 50% of their profits and earnings from their international subsidiaries. So I think that diversification is really what has set them apart and kept them on such a high growth trajectory. And so we still fully expect them to, be one of the top performers year on year this year, along with Access.
It's going to be a very interesting story. We have a whole bit more of earnings coming through within the Nigeria space and broadly speaking, not just here, but around the world. Thank you so much, Joshua Odebisi. Let's take a quick walk to Southern African space where China says allegations that Beijing is causing a debt trap in Africa, politically driven. I'm going to ask Joshua for just a few words around that, whether we're taking so much debt from China and are we here in Africa in a debt trap from Beijing. Sibanye Stillwater in South Africa says it's bought 2 Brazilian mines for $1 billion US. And Petro Diamonds in Botswana first quarter revenue up nearly 50% to 114.9 million US. Zimbabwe has expanded its budget for next year, raised up the entire package by about 900 billion Zimbabwean dollar. The Treasury reporting revenue target of $35.62 billion to $317.37 in the first 9 months of this year. Again, Zimbabwe have seen a massive inflow of remittances from abroad in 2021 post-pandemic. And South Africa's leading business cycle index is rebound just about 0.75% from 2.4%. Joshua, give me just a minute of your thoughts around China's relationship with Africa in terms of debt. China says, well, it looks like there's a push between the Western world and China as to who should Africa befriend when it comes to borrowing.
Well, yeah, I think obviously the fact is that China, I guess you could say, in a bit of a direct competition with, the other world superpowers with regards to, expanding their influence and control over the world, especially in Africa. But we've seen China's strategy has been to go into a lot of these countries, offer them help with regards to, infrastructure and things like that. But then they also bring in their own expertise. And so it's sort of a way to grow and expand their own economy and, provide employment for a larger number of people. And so, we obviously have a lot of Chinese firms in Nigeria, constructing airports, constructing railways, constructing roads. These things are done with the help of Chinese debt. And so I think it's a really well thought out strategy. However, the problem is obviously the fact that, okay, so I wouldn't say I blame China. Obviously, the truth is, if you offer loans or debt for infrastructure, the hope is that that infrastructure will sort of generate, sort of revenue and generate economic activity that can pay back those loans. Now, if a country is unable to actually generate that activity, actually generate enough to pay back those loans, it's not China's fault. It's just mismanagement from the local economy or local country. So I wouldn't say that they're trapping these countries, but I think that they are fully aware of the risks and they enter into these deals with a sort of idea or the sort of knowledge that if anything goes wrong, they'll probably be, they have some sort of collateral that they are probably looking at to sort of acquire. And again, this is just, it's the same with any bank that's giving out a loan. You have to, know that there's something backing this loan in order to mitigate your risk. What you would say is that probably there's higher political risk in Africa for one reason or another. We see political instability quite literally, making a comeback from the 90s these days with military coups. I thought we had passed the era of military coups, but things like that do put a damper on the prospect of growth on the African continent. But the truth is, without Chinese money, the American firms are not really interested in, infrastructure to the same extent. The European firms are definitely not to the same extent, at least not with the same intentions. They're not going to give us infrastructure debt financing for, our roads and our railways. They're not interested in all those things, at least not to the same level that China seems to be. China have a bigger interest in it at the moment. So we take the money where we can get it. But obviously, we know that it comes with a caveat that if you cannot pay back, the Chinese might say, okay, give us this asset or this, state-controlled thing. And that becomes a problem.
Well said. Well said, Joshua. There's always a caveat. There's always a stick at the end of the carrot, by the way. So keep that in view for those who goes borrowing. But let's wrap it up this morning with North Africa, where AXA Insurance is looking to invest 1.5 billion euros to support biodiversity within the North African region, particularly in Egypt. And Deutsche Bank is forecasting 5.5% growth for its Egyptian market in full year 2021-2022. Good bank business in the banking industry, Deutsche Bank in Egypt. Algeria as geopolitical face-off with Morocco is getting worse. It's going to stop. Algeria says it's going to stop gas supply to Morocco from November the 1st. That's going to be Friday this week. Mahawk Telecom, which is Morocco's one of the largest telecoms, reporting 9 months earnings, revenue down 2.6% to 26.7 billion local currency, that's dirhams. And Banque Nationale Agricole reporting net banking income up by about 2.7% to 580 million dirhams for the period ended September. That's 9 months earnings there. That's about it for this morning. Let's leave it there for today. Thank you so much, Joshua Odebisi, Head of Banking Research and Analysis at Vetiva Capital Management in Lagos. Thank you for your time and see you all next time.